Hey, everybody, welcome back to another episode of Startup Happy Hour. I'm your host, Diana Chen, and I'm here with our guest today, Jeff Silverman, co-founder and managing partner at Laconia Capital Group. Welcome, Jeff. So happy to have you here.
Great to be here. Thanks for having me.
So to start off, why don't you just tell us what Laconia is? I know it's an early stage venture capital firm, but beyond that, tell us more about who you guys are, why you started it, what sorts of companies you fund, etc.
All right. So we're based in New York. We started the firm in 2014 with my partner, David Arcara. And in 2016, we brought on the third leg to the stool, Jerry Karolova. And we, as you said, we're focused on investing in the B2B space, seed stage. We lead or co-lead most of our deals. We're sector agnostic. And we've done deals in marketing technology, advertising technology, fintech, insurance tech, supply chain. We just did a digital health tech deal. We look really overall, we look to invest in companies that are building a technology to replace an analog workflow that's out there. So wherever those analog workflows are, there's a new technology going to come to disrupt it, and we're looking to invest in that company.
Got it. So tell me a little bit more about your founding story, you and your co-founders. What happened back in 2014 that caused you guys to have this idea? I mean, it's a VC firm. It's, not a brand new idea, but what inspired you guys to form Laconia? And
the first VC firm? Wait a second. I thought we were the very first VC firm. I'm shocked.
Shoot, sorry.
Bubble. No, what happened was my partner and I had been operating businesses for about 25 to 30 years. We did not know each other. But we came together. So in 2010, I stepped down from my last company. During those last few years, around 2007 to 2010, I'd started making some angel investment deals. And some friends from DoubleClick, some former colleagues, some friends just overall throughout the industry. Nothing major. And then when I stepped down in 2010, I blinked and I'm like, wait a second, I've made about a dozen angel investment deals. I don't know what the heck I just did. It was, I like you, I like the business, here's a check. So I was a little burned out and decided to join an angel group, the New York Angels in New York. And on one of the first meetings, I'm sitting next to this gentleman, David Arcara, and we start to play New York geography. And David lives a block from me in New York. He has two boys that go to the same high school that my kids are going to. And he actually came up through the same industry, media, television, radio industry that I came up through. And we actually found out that he was a client of mine when I was at DoubleClick. But yet we had never really met. And so that's part one. At the same time, friends of mine were like, oh, you're doing some more angel investing. If you see anything really interesting, let me know. I'd love to piggyback on with the deal. And I said, I'm not doing that. Instead, I said, why don't I organize a dinner once a quarter? I'll bring in the 3 or 4 deals I like, and we'll all look at them together and decide, is it a yay or is it a nay? So David Arcara joined that group with us, and it ended up being like 20, 25 people. And around 2014, the group turned to me and said, this is so unstructured and we love what you're doing. We love what we're doing. Why don't we back you in a venture fund? So I stumbled into it. There was no grand plan. And I said, well, I just don't want to do a traditional venture fund. I'm not really a traditional person. I always like to do a little bit something different. But I don't want to do it alone. And so David raised his hands. He said, I'll do this with you. So took the next 3, 4, 5 months. We came up with what our TAC plan was, what kind of firm we wanted to be. And we launched Laconia first fund in 2014. And we're a very concentrated portfolio. So we made 7 investments out of that fund. We'll make 10 out of our second fund. And we're currently raising our third fund. We'll do about 15 to 18. And then in the first fund, we launched a internship program. And the interns really come and sit in our office when we had offices and when we all could sit together. They come into our office, they sit, and they participate in every aspect of the business. They are on every pitch. They're on every investor call. They do due diligence with us. They are in our partners meetings, and they really are treated like associates. And
that's awesome.
It's amazing. It's an amazing experience. We pay, and it's a paid intern. It's really important. We pay them. And it was really interesting so we do 2 during the school year and 2 over the summer. So one of the first interns we brought on board, probably the third intern we brought on board, was this woman, Jerry Kurlova, who is graduating from NYU, and over the last 2 or 3 summers had worked at different VC funds over in Europe. She's originally from Bulgaria, and completely fell in love with her. One of the smartest people I've ever come across in my life. But didn't have room for her. We're a small firm. And so she graduates and she goes to work for Techstars. And as we're starting our second fund, we call her up and she says, I've been waiting for this phone call since I left the internship program. Yes.
Wow.
So came on as an associate and then over the time promoted to principal, and now she's a partner. And as far as I'm concerned, the 3 of us are the founders of the firm because she's as important to this firm as the 2 of us. We just started a couple of years earlier.
Wow. What a story. It sounds like fate that brought you all together and that Laconia was formed almost.
Well, the funniest thing is how I met her originally was I went to a 50th birthday party for one of our LPs, and it was a Monday night, cold, rainy, miserable night in New York, and the Irish pub was downtown around Wall Street, and I live in the Upper East Side, and all I could think to myself was, this is not what I want to do. I want to go home, and I just want to veg out. And I got in the subway, I go down, and I'm walking up, and I get to the top of the stairs of the second floor where the party was being hosted, and there's a gentleman I bump into, and he's with this woman, and he introduces me to Jerry, and we have a 45-second conversation. And 2 months later, as David and I are deciding, where do we find the next intern? I was like, you know what? I met this woman who's kind of interesting. Let me see if I have her information. And so it was definitely fate. And fast forward, we're no longer, trying to figure out who to hire. We posted the internships for the next round of interns 4 months ago, and we had over 550 applications for 2 spots.
Wow.
Yeah.
That's incredible. So tell me a little bit more about what was it about early stage or even angel investing that drew you in more than later stage, especially as Laconia developed further and further. You guys have stayed true to your original, what it was formed as originally, to serve early stage startups. What's this attraction to early stage startups?
I think one has to look at what their skill set is. I am not a growth investor. I'm not a growth operator. I really love the wear multiple hats, and it's more about the go-to-market strategy and the sales and marketing and building the team. Where in growth or late-stage investing, there's a lot more. That's important also, but you also start to enter into cash flow and capital raising of a much different level. So it's not my strength, and that's part one. Part two is there's nothing better than sitting with a founder or founders who have a twinkle in their eye and an idea that they're trying to formulate, and to be able to work alongside them and foster that and feed that idea and go through the highs and the lows with them. So even though I'm an investor, what I didn't want to do, and David and Jerry didn't want to do, is we didn't want to step away from operating. We really love operating a business. And even though it's not our business, we want to work as closely, and we do, as closely with the founders as possible to help them nurture and build that business over the first 2, 3, 4 years. There's nothing in my mind more exciting than that.
For sure. And then tell us a little bit about the behind the scenes. How do you make decisions about which startups to invest in? Most of the people we have on this podcast are startup founders or people who work in startups and not VCs. I think you're only the second VC that we've had on. We had Brad Baum on from Lightbank in the past. So give us a little bit of, the behind the scenes and the secrets so that people listening can know, how to make their presentations and pitch decks as appealing as possible.
So I will actually tell you more of what not to do. How's that? So first of all, you have to treat this as a first date. And you come in, and on the purpose of a first date is to find, do I like this person? Do I want to go back out with them again? But you don't tell them your entire life story. You don't tell them, I grew up here. I was what I did in first grade, what I did in third grade. It's just overwhelming. And you're like, okay, psycho, I'm done. Pitching is very similar. All I'm looking for is, are you smart? Do I feel I can work with you? And do I like the vision? All the other things we're going to get into on the second, third, fourth, and fifth date when we go into due diligence. So founders have a tendency to come in and feel they've got 30 to 45 minutes to feed a baby a porterhouse steak. And I'm going to choke on it. It's going to be overwhelming. I'm not going to be able to digest the information. So let's have a conversation. I want to get to know who you are. I want to hear about your idea. How do you formulate it? Where do you see it going? And we're going to ask normal questions. But to dive into the heavy details, we'll get to that. The second thing I would tell you is they focus a lot on the team. Unless there's a name on your team that I should know, it's not really that important. To tell me, I've got this great person, Julie so-and-so, she's a brilliant engineer. And then I've got this person, John so-and-so, he's an amazing business development person. Okay, I don't know that. I don't know you well enough to take you at your word. And if you want to tell me, well, then I've got Elon Musk. Well, now it's a name I know. But if it's a name that I don't know, then all I'm taking you is at your word, and your word doesn't mean much to me at this point because I haven't gotten to know you. So focus on you, focus on the business, and focus on the market size. That's what I care about.
Got it. That is great advice. Hopefully people are taking notes on this. So this season of the podcast is all about shaping the future. And I know, it's in 2021, it's hard to predict even a year out what things are going to look like, let alone 5 or 10 years. But if you had to give your prediction for where things are going to be in 5 or 10 years, tell me, what do you envision the types of startups that are going to be at the forefront of the scene in 5 or 10 years?
Listen, I think I can't even think of 5 to 10 years, so I'm going to take a different approach with that. I think there are going to continue to be trends that are going to become more and more predominant. And as an investor, I'm excited by it. As a global citizen, I'm scared shitless by it. So AI is going to continue to completely become more entrenched in every aspect of our lives. Autonomous vehicles, any way you want to define that, is going to become massively part of our future of our lives. As a father of 3 young adults, I think it freaks me out that my grandchildren, God willing, will never probably learn to drive a car. One could say that, will we all be eating meat in 50 years? Traditional meat. So I'm looking at trends that are out there. And then I would go with what's going on in the crypto market. Whether you believe in crypto or you don't believe in crypto, I think, as a wise person in my family says, I'm not going to give him credit by using his name, you're really seeing the decentralization of business and democratization of business. And whether crypto takes off as a currency, the underlying technology of what's happening is extremely interesting and could have far-reaching events across every industry, every country, every sector. So those are more trends that I think we're looking at. And I think it's too early to understand, like NFTs, interesting. But let's look below what's the NFTs and what's happening and really what does that mean? It's almost like a trial balloon right now. Bitcoin's a trial balloon right now.
Totally. I'm just curious too, like from your perspective as sort of an outsider to the crypto world, but somebody who's crypto curious. What is it about crypto or decentralization? And
I like
that, crypto curious?
Yeah, I'd like to change my Twitter handle to crypto curious. Go ahead.
There you go. I didn't make up the word, so credit somebody, whoever made it up. But from your perspective, like what is it about crypto and decentralization and all of this stuff that excites you or that makes you think this is the future?
Part of it is I still don't truly understand it. And so I'm usually someone who's far from the brightest bulb in the tree, but usually I can take a confusing problem and simplify it down where I can understand it and then explain to other people. And I'm still trying to do this. This is a massive trust factor. And so it's been explained to me is the same thing. Like the dollar bill, the only thing that gives the dollar bill value is the dollar bill, because it went off the gold standard, is, the trust in the U.S. economy. So when you start to take something that really is not tied to a gold standard, is not tied to a certain economy, but is based upon people's faith and belief in something, in a really strange way, no matter how messed up our world is with politics in all these different countries, it's pretty wild that there's this currency out there that we all see, people, not all, because it's still a very small percentage, are getting behind and are doing it with a leap of faith. And so it's another way to bring down borders. It's another way to almost go around government control, good or bad. And it has complete transparency. Really, really interesting that it is full transparency. Where was this transaction done? Where is it moved to? And so I think from the NFT perspective and from the blockchain perspective, I think when you enter music into it, music licensing and tracking music royalties, I think it's going to be huge. I think artwork, yes, you can buy artwork, but I think from just certain things, there's a tracking, transparency and tracking that I think excites me.
For sure. Yeah, all of those things. And I think with the finance aspect of it, it's hard to see as much in the US, because, as much as there are obviously things to complain about with the economy and all of that stuff here, when you look at other countries like Argentina has completely blocked foreign currencies from entering, and some other countries in South America where the inflation is insane. And it's hard to make even a basic living down there with how crazily and quickly their currency fluctuates. I think that's where the case for Bitcoin or cryptocurrency is really a lot stronger.
It is, but let's understand, there's nothing fluctuating greater right now than crypto. The currency is really fluctuating until it becomes a more stabilized currency. I don't think people are going to be using it as a purchasing currency. Right now, it's a buy and hold or a quick sell for profit. But, there's, somebody can buy a slice of pizza. Are you really going to pay it in crypto? Because that cryptocurrency or Bitcoin or Ethereum could be worth 5x in 30 days. And that slice of pizza that you bought for $1 is now worth $20. So.
And that's where stable coins come in, right? That's sort of the appeal of stable coins.
It's where we're down a rabbit hole.
It's a rabbit hole, right? So anyway, going back to predicting trends in the future, I was also thinking another trend. I wonder what you think about this is a spike in healthcare startups or, just health tech startups in general as a response to the COVID pandemic. And just, tell me what you think about this, but I sort of think that we're never going to think about public health the same way again after COVID. I think there's always going to be a heightened awareness and sort of caution around public health. And I'm wondering if this is going to cause a spike in health tech startups. What do you think?
Well, first of all, the spike is there. Healthcare has been very, very active. You just saw Oscar go public the other day or early this week. We invested in a digital health workflow solution called Noteworth last March. That's growing very fast. I think, yes, healthcare is going to be big. I think what's going to be interesting from a healthcare perspective, and the last thing I am as a scientist, is I think it's going to be really interesting to see what technology has been mainstreamed through the development and distribution of COVID vaccine, that is where that's going to play into other solutions over the next 3 to 5 years. When you look at Pfizer's approach versus Johnson & Johnson's, much different approach. One's synthetic and one's this. It's going to be really interesting to see what comes out of that. So no doubt about that. But I would also look over the next 3 to 5 years of what industries haven't been disrupted by technology. Every industry is going to be or has been disrupted by technology. Every public company is not being disrupted by another public company. It's being disrupted by a startup or a private company. And so I think you have to look at every industry and say, That's going to be disrupted. That's going to be disrupted.
Yeah, and then sort of on the flip side of that question of what are the trends you see coming up, what types of startups do you see that are, maybe this isn't the best time to start it because its peak has sort of passed already?
I think everything goes through waves. In 96 to 99 was advertising technology 1.0. And then a number of years later, you had advertising tech 2.0. And then it's been stay away. And we're currently going through advertising tech 3.0. So I don't think it's past its peak. It might go through a trough and come back again. But listen, Facebook wasn't the first social site. And so the question is, what's the next Facebook? What's the next Google? No business lasts forever.
For sure. All right. So this question, I'm sure you're super used to. You've probably got so many answers for this, but what's your number one piece of advice for a college kid or a young adult who wants to own their own VC company one day?
All right. So this is the example I will give of you with VC. And I'm going to go back to when I was in high school 20,000 years ago. All right. In high school, maybe it was different when you were in high school, the cool kids in high school were either the athletes or those that had a rock band. Okay? Where'd the rock band play? They played at the school gym or someone's house. They weren't at a big bar. They weren't at a stadium, but they were cool. Dude, you have a rock band. VC has somehow become that. I love what I do. I've never been professionally happier in my entire life. I work with the best people at the company, and the founders we work with inspire me every single day. But that being said, it is a hard career path to get into. And people see the title of VC, but they're not truly understanding the career path. And there are many different ways to get into VC. So there's not a do this, do that, you get in. I've seen people come in from the finance industry. I've seen people come in from operating businesses. I've seen people come in right after college or business school. But it's a very, very small way to get to, it's very hard to get to the very top. And I mean, being a general partner, being a managing director, or being a partner at a firm. So, my partner, Jerry Kurlova, if you follow her on Twitter, made a really good post the other day about this industry. And we're going to continue to expand on this, but in the coming weeks. But to get a job as an associate, it's usually a 2-year gig. And most associates will either go back to business school or they'll go to an operating business. A large percent don't stay in venture because the next step is to become a principal and then a partner. And in order to do that, you either have to start your own firm or there has to be a growing firm that is looking to promote you from within. And so it's not as, I want to be VC, what do I do? If you do want to be VC and you do want to be dedicated to that path, then, you want to be involved in the ecosystem in the colleges you're at. You should join the entrepreneurship. You should look if there's a local incubator or accelerator that you can volunteer to work with founders and develop the necessary skills, listening skills, and normal skills of financial modeling. Help them with their cap table, help them with their financial model, help them with their PowerPoint presentation, help them with their storytelling, and give of your time and develop those skills. At the end of the time, there's 2 big things that are important with being a venture capitalist: good deal flow and access to capital. And you're going to get good deal flow if you have strong personality skills, you are smart, and you're able to help these companies and be a connector.
You brought up a couple of good points there that I want to unpack. The first is, I think a lot of people hear VC and it's just this buzzword or this like sexy sounding thing. And everybody, hears like Silicon Valley tech, startups, VCs. All of these are just buzzwords, but not everybody understands what it actually means to be a VC. So maybe start by explaining that a little bit. Like, what does your day-to-day look like as managing partner, founder of a VC firm?
So I wake up at 5:30, 5:45. I walk my dog. I work out for about an hour. I get to the work around 8:15. No, but seriously, what is great about my job is that it's different every single day. So you have to be a learner. I was never a learner. I was the worst student in Tulane University's history. I'm amazed they let me graduate, or I think they more forced me out. But I get to the office. We have, I'll read the newspapers and the trades and get through stuff that's happening. There might be a topic or an industry sector that I'm currently learning about because we've seen companies in that space that I want to understand better. It might be that I'm curious about something and I want to see if we should be looking at areas in that space. So I'll read up on sectors. I might be having meetings with some of the founders of our portfolio companies that day. It might be a board meeting. It might be I'm checking in with them just to see how they're doing and what we can do to help them. There might be a problem with the business that we're dealing with. I might be interviewing an employee for them. We could be talking to one of our LPs, talking to them, developing those relationships. It might be talking to other institutions about our future raise and laying the relationships with them. It can be listening to pitches. It can be talking to other VCs. It can be talking with other investors in our fund, in a deal, trying to work out a problem or talking about strategy for the next time. Listening to pitches. It's mentoring our interns. It's writing an investment opinion on a deal we're looking at. It could be calling up a founder and telling them we're passing. One thing we will not do as a firm is we will not ghost somebody. If we're going to take a meeting with you and we're going to pass on you, we're going to call you and tell you. You're just not going to hear from us again or that. And that's, again, some things might slip through, but that is our intent, is to call them up and say, we're passing and this is why we're passing. So that's just a small glimpse of what my day could look like.
That's awesome. So if you were to sort of summarize that into what are some personality traits or just a few key, traits that a person should have to succeed as a VC? I mean, obviously anybody can succeed in, any job if you work hard for it and whatever. But as I was, for instance, I was an attorney in my previous career, and having gone through that, I've been able to see that there are definitely certain personalities that are just more built for that sort of career than others. And I think that's true for different types of jobs. So for people that want to be VC, found a VC firm or be a managing partner or whatever the case may be, what are some just natural personality traits that will really serve them well in this role?
There's one thing that all of our interns say when they leave the job, when they leave the program. I say, what's the biggest surprise that what you assumed coming in and what reality was? They said, I can't believe how much of a people business this is. It's not about the finance. It's not about the Excel spreadsheet. It's not about diving into the technology and what the technology base looks like and a stack looks like and all that. It's people. And it's the ability to be able to sit across from somebody who's a founder who knows they want your money and to truly understand, are they authentic? Do they have the horsepower and the will to go down this path? Because this is the hardest thing in the world, is to start a company. One of the hardest things. It's not a roller coaster by weeks or months. It can be roller coaster by minutes. And so you really have to be able to be a good listener. You have to be able to really understand people. You have to be able to pick up things very quickly, new industries. And you have to be able to you want the founders to find you approachable. And so I think that is what people have to understand. You've got to have a personality. You just do. You're dealing with people all day long.
Got it. And then the other question I had for you earlier is, have there been any situations, or I guess what percentage of the time do you feel like you're competing with other VC firms to fund a startup versus, startups trying to get on your good side and get funding from you?
At the stage we play at, there's a lot of syndication. So I'm not going to go in and write a $3 million check and a $3 million round and not bring somebody else in. So there's always syndication going on. And you always have those VC partners you like to work on. Some will call and say, hey, listen, I'm about to do a term sheet on company A. Love you guys to take a look at it. Would love you to be part of the syndication. with our firm, we mostly like to lead or co-lead. We like to do our own due diligence. We like to help build the syndication. So there'll be times when we're like right now, I've got a call in 20 minutes with a company we're in due diligence with, and I know there's 2 or 3 other VCs circling them also. And, we'll reach out to them probably in the next week and be like, where are you guys at? Do we want to do this together? How's it going? Or we'll submit a term sheet if we get there, and we'll say to the founders, who else are you talking to? Do you want to introduce us? Do we want us to help you finish the round? Every firm is a different approach. We will take our time and maybe 3 to 6 weeks to due diligence a company. We're doing more than just due diligence of a company. We're developing a relationship with the founder. We're about to write them, a $700 to $1 million check. I just can't do that like that. We're a concentrated portfolio. It's like getting married. We're in this for life. We're not sitting there going, this is it. Thank you. Talk to you later. When we look at a founder and we invest in a founder, we're thinking that we're going to invest in them, and not only this company, but the ones they do in the future. So
Love that.
it is competitive. Deal flow is competitive. There's no question about that.
Got it. All right. Well, this next segment, I call this Explain Your Tweet. This is where I go through your Twitter account, Jeff, and I pull out some cryptic or interesting or funny tweets, and I give you a chance to explain them. So I've just got a few here. The first one is, starting on a positive note, you tweeted this on February 19th, just recently. I was notified that the government was sending me a COVID stimulus check. I am not deserving, but found no way to refuse it. So I turned to 1K Project and donated those funds to a family that truly needs the money. If this is true for you, visit the website. I just want to call this out because I have never heard of this before, and I think this is an awesome organization. So do you want to tell people a little bit more about this?
Yeah, so I don't know how the stimulus works. I am very blessed. I do not deserve a stimulus check. And the government sent us one. And I tried calling to say, do I send this back? And there's no place in the government to call. So a group of people, I have nothing to do with it, started this organization. And it allows you, before it's not stimulus driven. It was, a lot of families are going through hell. How do we get them money directly? And so this organization started. So when I got the stimulus check, I felt very guilty. And so I turned to this organization and made a donation, and they match you with a family. So actually, I filled out a form. They sent me a link. I go to the link and I donate directly to this family.
That's awesome.
Yeah, it's great.
That's awesome. And the website, I think, is just 1K. Yep, it's just 1kproject.org. It's the number 1. So people listening, if you're in the same boat as Jeff, definitely go check it out and help out a family in need. All right, next tweet. This is from February 8th. You tweeted, we just can't move forward on diversity and not also address inclusion. Colleges should end the option for incoming freshmen to choose their roommates. Get what you get and learn to accept.
So when I was going to college, it was random selection. You got your roommate, and that was it. And now, in this generation, my kids get to select their roommates. But yet we're trying to be more accepting and diversity and all of that stuff. But at the end of the day, if you're allowing people to select their roommates, they're going to select people they know or they've been introduced to. And there's not giving them the opportunity to meet people who have different backgrounds. And so what you end up doing is you go to college, you get your roommate through a friend that you have a friend, probably look the same, probably the same similar background. So where is that? So the college campuses are now becoming these groups of people with their friends, these group of people with these friends, these people with their friends, and they're not really bringing down the wall. And so I am very opposed to allowing people to select roommates. I don't think it helps blend a campus and allow us to get to the place we need to get to as a civilization.
So when I read that tweet, I actually was trying to think back to when I was in college, if we had the option of selecting roommates, and I honestly can't remember. And I was in college much more recently than you were, but I honestly can't remember. I know I personally did not select my roommate, but
you did have a chance to select your roommate, and right when you get accepted now, there's a Facebook group. You go to the Facebook group, you introduce yourself, you start chatting with people, you meet with people, you then get together with people in the city or town you're in. My daughter is going early decision to Syracuse. She's on 3 or 4 Facebook groups. She's gone out a dozen times and met groups of people. I think she's going to know 200 people by the time she goes to Syracuse, if not more.
Wow. Okay, so I may not look it, but I was in college a long time ago. It's been over 10 years. So I don't think we had that level of Facebook. We definitely had Facebook, but not that level of Facebook interaction and meeting people online.
Yeah, it's gotten much.
Different world today. Yeah. All right. And the last tweet that I want to call out, this one's from February 8th. You tweeted, "The way a person responds when I inform them we are passing says so much about their character. Rejection is part of reality in life. You can let it shut you down or drive you forward. Our last 2 investments were done after we passed twice on those founders." So obviously, like, really cool and really good reminder for people. If you don't get in once, keep trying, don't give up, keep applying again and again and again, and you might get on the second time, the 6th time, the 10th time, whatever the case may be. But also, I just wanted to ask, what is the craziest story you have of, somebody acting out or just acting totally unprofessionally when you've told them that you won't be moving forward with their startup?
It's remarkable how people handle rejection. And, as I said to you, when we go through a due diligence process, it's one of the strongest insights we get into how somebody operates their business. Are they prepared? Are they responsive? Are they professional? Do they have a personality? Like, all these things. If they're giving you documents that are sloppy, if they're giving you documents that are missing pages, if they're late, they say, "I'll get you Monday," they get you on Thursday. That's how they're going to run their business. And that's actually not good. So, and you're going to have rejection. You're going to get a client that says, or a prospect says, "I'm not going with you. I'm going with another person." So when me and my partners call somebody to let them know that we are passing, we're actually going to give them feedback. Again, we're one voice. So lots of investors out there, we're wrong more times than we're right. So we're sitting there, and I take time to prepare to say, "This is why we're passing. I want you to learn from our experience. Maybe we're wrong, but it's worth going." And I'll get the phone and I'll be like, "Listen, just want to tell you up front, we're passing, but," click.
Wow.
And like, wow, like, okay, you don't even want to hear why. You're just like, "Nope, I'm on the next one." People have to be much more understanding that it's not going to work. You're going to speak to 100, 200 VCs, and you're hoping you get a couple to say yes. But for the ones who are saying no, listen to why they're saying no, because that's going to help you potentially in the next pitch. And
yeah, that's such valuable feedback, free feedback. I mean, I can't believe people wouldn't take that.
And just because we say no doesn't mean we're going to say no forever. So the last 2 deals we did, we said no twice to each of them, but they kept in contact. They took some of our advice, didn't take some of our advice, took some of it, did not. Well, fine. We're not right. We don't know your business nearly as well as they do. But they leaned in on the negative, on the feedback. They didn't get defensive. And they got to a place, both of them, where we're like, now this has become an interesting business. Now we get it. Or there are factors going on in the world that caused the business to become interesting to us. And we did the deal. And both companies are doing exceptionally well.
That's awesome. So cool to hear. All right. So tell people a little bit who you are, Jeff, outside of work and all of this cool stuff. What are some of your hobbies? What do you like to do? What are some cool, fun, random facts about yourself that you want people to know?
First of all, the best title I have is father. I'm the father of 3 amazing young adults, 24-year-old son, 21-year-old daughter, and an 18-year-old daughter. So they are my everything. I love to play with them. We do crazy stuff. I lead with yes. I'm in my firm. If you go to our website, LaconiaCapitalGroup.com, and go to our bio, it will tell you I'm the Generation Zero, the millennial of the firm. So I love experiences. I drove down to Florida in December with my son, and we went quail shooting. Why not? Never done it. Give it a shot. I love to cook. I learned to cook in college. I found it was a great first date. And so that my cooking skills have increased, and I really love to cook, although I think COVID burned me out of my cooking skills. I'm picking tennis back up again, and I just like to have fun. I really like to work hard, like to play hard, and I'm totally into trying new things at any time.
I love it. All right, so here are two fun questions for you to wrap up. The
Yep.
first one is, if you were stranded on a desert island and could only have one other person with you, who would you want that person to be? And it can be somebody who's dead or alive.
Oh my God. Oh, I have no idea. There's not. I could be one person.
That's how the hypo works.
Yeah, I know. No, I can't. I can't answer. I don't know who it would
You'd
be.
rather just be by yourself?
No, I don't. I have to think of who I'd be with. Richard Branson.
Okay.
I think he would be a groovy person to be with. Never met him. I've heard him speak. And he sounds like he's as active and daring as I am. And I think it would be kind of interesting person to hang with.
You guys would get yourselves into a little bit of trouble on a desert island with the two of you. Two of you adventure fun
Yeah.
people.
Yeah, I agree.
All right, and then the second one, if you could go back to college and redo it, knowing what you know now, what is one thing you would do differently?
I'd go to classes. I would definitely take my academics more seriously, and I would have I probably would take my academics more seriously, and I would have joined more clubs. I didn't really
Okay.
take advantage of the clubs that were at Tulane, and I regret that.
Got it, got it. So what were you at the other types of clubs more?
No, oh, no, those are called bars. I just, you know what? I was still finding myself at school. So joined a fraternity. I had a couple jobs to pay for my expenses. But I wish I had taken academics a little bit more seriously, and I wish I had joined more clubs to participate and learn other things. I'm more of a learner now than I was then. So it's
That's
never
really interesting.
never too late to change.
That's really interesting. Well, I love that. All right. Well, thanks so much, Jeff. I really enjoyed this conversation. I learned a ton from you, and I hope our listeners did as well. Before you go, just tell people where they can find you if they want to connect with you personally, and also where they can go to learn more about Laconia Capital Group.
You can visit the firm at laconiacapitalgroup.com. You can follow me on Twitter at jsilverman22. You can go to my LinkedIn. I have my email address there. It's jeffrey@laconiacapitalgroup.com. And that's it. I'm very accessible.
Awesome. Awesome. Well, thanks so much, Jeff. Really appreciate you being here and taking the time to do this. Thank you, listeners, for tuning in. And we'll be back again soon with another episode of Startup Happy Hour.
Thanks very much.